Australian pension manager IFM Investors is committing more of its pension capital to investing in the Canadian market.
Welcome, and thank you for coming. Canada and Australia, of course, great partners, share the same values, share many of the same interests in defense, security.
Breaking tonight, America's economic dominance just suffered a staggering blow. One of the world's largest infrastructure funds, IFM Investors from Australia, has made a historic decision that has sent shockwaves across Washington. $242 billion worth of investment is now heading to Toronto, Canada, while American investors are left scrambling. Yes, you heard that right. $242 billion. Not loans, not conditional aid. Direct long-term investments into Canadian infrastructure.
What's the reasons behind deciding to expand the money here?
Well, actually, we've been working with Canadian institutional clients really since 2012, helping them get exposure to infrastructure assets. That business has grown, so really establishing a physical office here in Toronto.
This is the single largest peaceful reallocation of North American capital in recent history. While Trump threatened tariffs and tried to coerce America's closest allies, Canada's strategic independence and stable governance became a beacon for global investors. One could almost feel the shock in Trump's administration. For months, tariffs were supposed to pressure Canada into compliance. But the opposite happened. Every threat, every demand, every chaotic policy only accelerated capital flight from the USA to Canada. The Australian megafund's choice isn't speculative. It's a calculated, patient, and strategic move. A declaration that Canada's model of partnership, respect, and stability beats coercion and chaos. Tonight, we break down exactly how this $242 billion earthquake happened, why Trump's tariffs failed, and what this means for the future of North American investment. March 2025, Mark Carney takes office in Canada with a mandate dismissed by Washington. Build infrastructure independence, attract global capital, reduce reliance on American markets. Finance Minister Francis Philip Champagne set a bold target, $500 billion in private sector investment over 5 years. The response from Wall Street was skeptical, if not outright mocking, and analysts said it was impossible. Hedge fund managers doubted Canada had the scale or influence to compete without American participation. They overlooked one critical fact: stability attracts capital. Chaos repels it. Trump's tariffs were designed to pressure Canada. But what the American administration didn't understand was the law of unintended consequences. By weaponizing trade relationships, threatening 25% tariffs on Canadian goods, and making every negotiation feel like extortion, Washington inadvertently created a vacuum that Canada could fill. IFM investors saw that gap immediately. This wasn't some risky startup fund gambling on emerging markets. This was a $242 billion institution owned by 15 Australian pension funds and one British pension fund, conservative, patient, and focused on multi-decade returns. Their decision to open a Toronto office during Trump's second administration was a clear message. Stability and partnership beat coercion and chaos every time.
Well, actually, we've been working with Canadian institutional clients really since 2012, helping them get exposure to infrastructure assets. That business has grown, so really establishing a physical office here in Toronto was the next logical step in that growth strategy and supporting our Canadian institutional relationships here.
And what with the expansion, where are you going to be looking? What do you have now, and where will you be looking?
Yeah, so it's interesting. We have 2 existing assets in Canada. We invest on behalf of our clients in Enwave's Canadian District Energy business. They're world famous for their deep lake water cooling system. It's really a geothermal system that's used to heat and cool about 60 million square feet of downtown Toronto.
IFM's approach is not about short-term gains. Their ownership structure, rooted in union pension plans, allows them to make 30 to 40-year commitments to infrastructure. They invest in assets that power cities, airports, ports, energy grids, telecoms, and digital infrastructure. In Canada, they already have $2.1 billion invested in projects like Vancouver's GCT Global Container Terminals, handling 70% of the Pacific port traffic. N-Wave Energy Corporation, providing essential commercial heating and cooling across Ontario. And this is just the beginning. The Toronto office is being opened to expand investments into energy infrastructure, including renewable power and LNG networks, transportation systems that reduce dependency on U.S. logistics, social and digital infrastructure, including data storage centers and fiber networks. Notice the pattern. Every sector IFM is targeting is aligned with Carney's strategy to reduce American reliance. Energy investments in particular are strategically critical. Canada is building the foundation for a fully independent, globally connected infrastructure ecosystem. Here's the irony. Trump's tariffs were intended to force Canada into economic submission. Instead, they accelerated exactly the diversification that reduces American leverage. Every threat made Canada more attractive to investors. European companies are opening North American headquarters in Toronto instead of New York. Asian investors are choosing Vancouver over Seattle. American manufacturers are exploring Canadian production facilities to avoid tariffs. Each of these decisions individually may seem minor, but collectively they represent the largest strategic capital migration North America has ever seen. A historic shift with long-term implications. Canada's stability and respect for investors is now being rewarded. From March to December 2025, sovereign wealth funds and institutional investors committed billions in direct investments, bypassing loans or conditional aid. $70 billion came from the UAE alone, focused on critical mineral processing and energy infrastructure. The message is clear. Canada offers reliability, long-term stability, and respect, something America under Trump cannot guarantee. IFM's statement reinforces this. We see opportunities to build our investments in a country with a dynamic infrastructure landscape. What the government is doing around infrastructure investment supported our decision to make Canada a priority. This isn't anti-American sentiment. It's rational, calculated investment strategy. Sophisticated, patient investors are backing a country they can trust for the next generation. And the U.S. is losing out. The impact of this investment is not just financial. Job creation. Toronto office will hire dozens of infrastructure experts locally. Operational growth. IFM doesn't just invest and leave. They build teams to manage assets long-term. Strategic independence. Canada strengthens domestic infrastructure capacity, bypassing American middlemen in key sectors. This shows a fundamental contrast between Canada's partnership approach and America's coercion approach. Where Trump demanded submission, Carney offered collaboration, and the market voted decisively. Tonight, the $242 billion decision by IFM investors sends a powerful message to the world. America's coercive trade tactics are losing ground. Canada, through strategic foresight, stability, and respect for global capital, has emerged as the new hub for infrastructure investment. Trump's tariffs, designed to protect American interests, instead accelerated a massive capital migration to Canada. This isn't a short-term phenomenon. These investments are multi-decade commitments that will shape North America's economic landscape for generations. For viewers watching, here's the takeaway. The future belongs to countries that build trust, stability, and strategic independence. Aggression, chaos, and coercion may provide short-term leverage, but long-term value lies in partnership. $242 billion isn't just a number. It's a historic vote of confidence in Canada, a rejection of American chaos, and a wake-up call for Washington. Mark Carney's vision for Canadian sovereignty and infrastructure independence is no longer hypothetical. It's real, funded, and unstoppable. As this capital shift continues, one question remains. Will America recognize the lesson in time? Or will more global investors follow Australia's lead and bypass the U.S. entirely? Stay tuned. This is not just a story about money, it's about the future of economic power in North America.